Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'm going to be talking about the order flow delta and sort of some of the problems that I've seen people make with analyzing the order flow delta. But before we jump in, if you enjoy learning from these videos, don't forget to subscribe and click the notification bell so you don't miss any new upload. And if you find today's video helpful, be sure to hit that like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback, and oftentimes I do end up making videos based off of, user comments, basically people asking me a specific question for further explanation, or, a topic that they're interested in. So, your support really does go a long way in helping me create more content just like this. So if you're getting value from my channel, be sure to subscribe to the channel, and let's jump into today's topic. All right, so delta, right? Order flow delta. Now don't confuse order flow delta with options delta. What order flow delta is, it's the net difference between the aggressive buying and the aggressive selling in a period. It could be on a bar. Some people will look at it over a 30-minute period. There's a couple different ways to look at it, but when I talk about order flow delta, I'm specifically talking about it on a bar-by-bar basis, and you even have different deltas that you can look at. You can look at the final delta. When I talk about delta, that's sort of the headline number. Every bar is going to have it. It could be positive or it could be negative, and on occasion, it's more of a coincidence, I think. I haven't really found anything spectacular. I can't say, if it lands on zero, people say, oh, that must mean something. It landed on zero. Well, no, it's just more of a coincidence that, the bar just happened to end right there. If it's a time-based chart, it just ended its time period and delta just happened to be zero, because it could have easily been positive or negative a few contracts. But there's max delta, which is how strong the delta was at one point in the bar, its strongest point. Min delta is the opposite. Min delta will always be negative. It's how strong aggressive selling was in a bar or a period. Then obviously you have cumulative delta, which is sort of your running total for delta during the day. And, you have delta divided by volume as well. Okay, but what I want to talk about is the actual delta number itself. Okay, so you can see here, this is this morning, this is this bar. This red line down here at 45.27 is the low of the day, and we got a bar with very strong positive delta, which is what you want to see when you're at the low of the day. It's positive delta of 28.21, 2,821. Nice bullish bar, right? We've got, it's one tick off the low. You've got 1, 2, 3, 4, 5 buying imbalances, okay, which is nice. You got a single print in here, 4. It's all shaping up to be a nice bullish bar, okay, because, you got the strong delta. What it's telling you is that you're at the low of the day and you got some nice aggressive buying coming in. 1/3 of the bar's volume is positive delta. The bar traded 8,363. The delta itself ended up at 28.21. So again, it's overall strong, but that by itself, while it's a strong indication in the order flow, you still need to have complementary order flow. What is complementary order flow? It's follow through order flow. You still need that buying to continue if you're looking for this market to be rallying. Okay, and what happens in the next bar? The next bar is where you're going to look for complementary or confirming, or whatever term you want to use for it, order flow. You don't get it. It trades one tick higher than this nice bullish bar with the bullish order flow. It only trades 7 contracts. Then it trades back down into the previous bar's value area, right? That's this greenish area here. That is not a good sign. That's not a healthy sign of a market that is starting to move away from the low of the day. Because if we can't build off of this bullish bar, right, if there's not more buyers stepping in, the market's not going to go any higher. If anything, it's going to do what it did here, where it went sideways. Eventually, it made another run trying to go higher, but in the meantime, it made a new low. So just because you have a nice, strong, positive delta, don't immediately jump for joy thinking, hey, I got a great trading opportunity. You still need other buyers to be coming in. You need this move to be sustained, going higher, at least in the next bar. And again, I do get excited when I see something like this near the low, but my excitement is tempered when the next bar can't even trade any higher. I mean, one tick for 7 contracts is not really trading any higher. I'd like to see at least 2 ticks and, preferably more to give me some sort of confirmation one way or the other, right? But this 7 lots, 1 tick higher than the high of the bar that had all the bullish order flow is not a good sign. Okay, so I'm not surprised that it went sideways here. Okay, and again, even if I got long, even if I say, oh, it traded 1 tick above, okay, fine, I'm looking to get in. The fact that the next bar's got a lower high, the next bar's got a lower high, I don't need it to break to a new low to get stopped out. That's my sign that, hey, you know what, this isn't working out. It's time to cut that, cut that loser. Now, another sort of problem I see with traders making is getting overly excited with big negative deltas at lows of the day. Now, I like to see, big positive deltas at lows of the day, but this was interesting. I'll be honest with you. This is not something you see a lot. This is 827, 828, a couple minutes before the cash open. You got a bar here with very strong negative delta, very healthy volume coming in right ahead of the cash open, which sort of gives me a bit of a preview that, hey, you know what, today is probably going to be, or at least, the open is going to go lower, because you don't usually see this type of volume. 7,000 contracts. This is a 1-minute chart. 7,425, 736, 7376 rather, 7,376. But a big negative delta, minus 2,100. And then in the next bar, you get that complementary order flow. But usually, again, this is coming in right before the cash open, which is not necessarily a time I'm really looking to put anything on. But this has the complementary order flow. Oftentimes, when we're coming into a low, you see that big negative delta. That's what you expect to see. Okay. I mean, now then you're gauging how much lower you're going to go. Would I still take a trade on a big negative delta at the low? Possibly if I get that complementary order flow. But personally, I find sort of the best trading opportunities are going to be that big positive delta off the low with the follow through. Because, this is what kills me sometimes. People are like, well, if you're such a good trader, why are you sharing all your secrets? It's not secrets, right? It's there for, it's in the order flow. Everyone can see it as long as they know what to look for. And it's like, okay, there's 2 ways to look at it, and they both have the sort of the same meaning. It's like the person, sometimes I run into people like, oh, I got this method of trading, but I don't want to tell anybody, because I'm going to lose my edge. Okay, well, I could understand that part of it, but at the same time, if nobody else sees what you're looking at in the market, who else is going to be there to move the market, right? If it's such a super secret method, but nobody else can see it, like to get long, like for example, right? You say, oh, I got this super secret method here, to get short. Okay. But if nobody else is thinking of getting short, why is the market going to sell off? Is it or not? Because once you get into a trade, you got no control over the market. The market's going to go wherever it wants to go. Okay. Then at the same time, people are like, well, I can't tell you how I trade because I'm going to lose my edge. And again, it's like, well, your edge is probably going to disappear anyway, because, really what you want to be looking at are the things that are obvious that everybody else is looking at and is going to be moving in that same direction. Because at the end of the day, if a market's going to go up, you need a lot of people to be bullish. Market's not going to go up if everyone is bearish, right? So sometimes, that's why people say, well, if it's so great, Orderflow is so great, you should just live in a mountain, trade by yourself and, have all the money in the world. Well, no, I want people to also see what I'm seeing in the market, because, I've built a whole trading career, and I'm not talking about a trading career where I'm just trading from my house in my pajamas like I'm sitting in right now. I worked at JP Morgan for 8 years. I worked at Cargill for 4 years. I've worked at Commerce Bank for several years, etc. So, a lot of what I teach is based off of my own personal experience as an institutional trader. So while I say selling into a low, right, can the market go lower? Yeah, but sometimes you see the market go lower by a few ticks, right? Yeah, I was right. I said the market was going to go lower. It's like yesterday. Okay, let's take a look at yesterday. Going into the highs yesterday, there were some bars with nice, big, strong, positive deltas right here. Okay, 2623, the delta, 2623. The volume is 5,700. Almost half of the volume is positive delta. Here, new high, big positive delta, 2,400. The volume for the bar is only 3,900. Again, the delta into the volume, it's 61%. That's huge, right, for the E-minis. Okay, can the market go higher? Yeah, it went higher. 1, 2, 3, 4, 5 ticks. Right up here at the high, you got that nice positive delta, 936. It's closing right on its max delta. What I'm saying is be careful. You got strong delta going into new highs, strong delta going into new highs, strong delta at the new highs, right? New high, new high, new high. Now, you could sort of parse it, right? Put the pieces together, say, yes, we are making new highs, but you can see the delta strong, a little bit weaker, more weaker. Then strong selling comes in. This is what I'm talking about, right? Where what you want to see is the market, right? You want to see the sellers be coming in at the high, buyers going into the high. That's what I'm expecting. Just like that, what I was showing you earlier with the a minute or two before 3 minutes before the cash open with a strong negative delta. Can the market go lower? Yeah, it can. But like here, strong market. Oh, I got to get long. You get long, 60. It only trades up to 62. And then it sells off 10 points down to almost 52. Here, here you got the strong negative delta. Now you're starting to see selling come in. The difference between this high with the negative delta and the low that I showed you earlier with a nice positive delta, now you're trading down, right? You got red candle, strong volume here, 200. Even when offered here at 60, then it went sideways, then it fell over. But still, that's what you like to see, right? As compared, red candle. Okay, yeah, it went sideways. Fine, fair enough. But today, let's go back to today, that one I was showing you earlier. Again, you look at these little nuances, the slight differences. Green candle, big positive delta, comes up here, trades 7 lots. Okay, but it's followed by a red candle where it trades back inside. If this was a green candle and it's just sort of hanging around 33, I think it would have had a much better opportunity to continue going higher. But again, I still like it. I just wish it got some follow through on it. That's all I'm saying. Okay. And again, people will be like, oh, look at this red candle, big negative delta, getting excited, minus 1,400. I got to sell. Okay, it goes 1 tick lower, but then it's followed by a green candle. It got no follow through. The next bar is not complementary, right? If you're looking to sell and the next bar rallies up, that's not good. It actually goes all the way up from that low here at what is that, 33.25. Goes all the way back up to 39, right here. And then eventually, yeah, it went down, but are you willing to take 5-6 points of heat? What is that? 33 up to what is that? 33.25 up to 39. Yeah, almost, a good 5 points of heat. I don't know, maybe. I just find it, a better opportunity if you're at the high and you got the big negative delta, or at a low with big positive delta, but you'd want, follow through, not followed with the red bar. Again, if I was buying it here at 32.25 and this red bar came in, even in here, I'd be looking, you got to cut it. You just got to cut it. Now, there was another bar here, which was quite interesting. Where was it here? It was this bar here, okay? This bar, it's a green candle. Again, it's got some bullish information. And it's got strong negative delta. Okay, so it's telling me, at one point, it was minus 1,400. Okay, so I got, bullish value area. I've got, bullish slingshot coming in here. Got imbalance reversal. So early in this bar is quite strong selling, right? Because obviously coming down to a new low, it's running into some liquidity in here. Okay, and it turned up. Max delta 0. You see 515. So it actually went from minus 1,400 to just minus 515. So you gained back about 1,000 in the delta. And you got 3 imbalances in there as well. It's kind of a hidden move in there, and again, it's something that, potentially, this market could rally off from. However, the next bar doesn't even trade higher. You got no complementary order flow, no follow through order flow, which is not what you're looking for if you're looking for the market to rally off the low. Now, there was another bar in here also, which was, if I could find it here, interesting as well. Where are you, bar? I'm losing track. It was also a nice green candle where the market didn't build off of anything. I can't find it here now. This one. What am I looking at? It's staring at me right in the face. About hit me in the head. It's a nice big up green candle, right? And again, we just came off our low, positive delta in the next bar. Okay. Here, this bar, it's got a bullish value area, right? It hasn't been retested. Point of control is obviously going higher. Thing I don't like, it's got 117 delta instead of, I'd like it to be a little bit higher, a little bit stronger than 117, preferably higher than the previous bar. But nevertheless, we get this big push up, right? Got a nice stacked buying imbalance coming in here. Big bar up, right? That's the type of bar people get excited. People watch price action and say, this is it. The market's moving. How many times have you looked at just a regular simple candlestick chart and see that big green candle like this, thinking, this is it. We're taking off. However, when you look at what's taking place in the delta, it's a big green candle. Delta is only 160. 15,000 contracts trade, right? 15.7. Delta is only 160. At one point in this bar, it was 989. So it was quite strong in this bar, and it only ended up at 160. That's not a good sign. Obviously, the next bar goes inside. Not a good sign as well. And inside again, and basically all these bars inside. Then you get the big red candle down with a strong negative delta, this time minus 1,000. But when you look at that, these are kind of the opposite in shapes and size. Big red candle down, big green candle up. In this case, you got a small delta. It was strong early, 989, only ended up at 160. So it's telling me that even though this bar is a big candle up, nice big green candle, I get selling coming in late. I mean, after we sort of peaked out, it's one of those things, like, those carnival games, you get the hammer, you hit the thing, see how far you could hit the object up to see how strong you are. By looking at the delta, right, imagine market goes up, strong, 989, but it only ends up at 160. Here, big red candle down. Our min delta is minus 1252. We end up at minus 1011. So it's still quite strong late in the bar. So this one was quite strong early, ended up kind of mixed. It was still positive 160, but you'd like it to be closer to its max delta rather than to the zero line. Here, this red candle, big red candle down, min delta, how strong negative delta was in the bar, how strong aggressive sellers were in the bar, and we're closing near that number, minus 1011. We're only 200 contracts off. Still over 1,000, so it's quite strong. And then the next bar, you got that complementary order flow, right? It goes lower. Still got negative delta. It's a red candle. Green candle followed by a red candle. Not a good sign, right? If you're looking to get long off of this just off of a big green candle, some people like to trade those. Well, I'm just showing you some of the pitfalls of doing that. So again, when you see bars with big deltas, temper your enthusiasm unless you get some follow-through order flow. Okay, by what I mean by follow-through order flow is in the next bar. It's a simple thing. It's not something that you really got to pick apart. It's simple. Okay, yeah, I got strong selling coming in here. Is it continuing? If that strong selling is really manifesting and it continues, you'll see it still in the next bar. Here you got strong buying. It's misleading. It's big green bar up. Early in the bar, strong aggressive buying, but then it tempered out. right? It sort of got back to kind of a mediocre number in aggressive buying. And then the next bar went nowhere. It stayed inside. So that wraps up this video today on sort of the pitfalls that people run into when looking at Delta. So I hope you found these tips helpful for your understanding of order flow Delta. Let me know what you'd like me to discuss next by leaving a comment down below. And again, if you enjoyed this video, make sure you subscribe to the channel so you don't miss any of my upcoming content. So I'll see you guys on the next video. Bye-bye.